What's going on, everybody? It's me, Ronen. At some point or another, you're going to run into financing. Whether you're financing your truck, your house, your car, or a mortgage, all the rules that I'm going to go over today are going to apply. In this video, we're going to take a brand new unit, and we're also going to take a used unit, and we're going to go over the difference in finance structures. Also, in this video, we're going to be exposing those dealerships that all get kickbacks from the finance companies. What does that equate to, and how much money do they actually get from kickbacks? And also, we're going to be exposing all those crooked finance companies. What kind of percentages will they make on your deals? How much money does that equate to? So stay tuned because your mind is going to blow. So just really quickly, what in the world inspired me to do this video? So I have recently onboarded an owner-operator, and because one of the processes of onboarding an owner-operator, I have to look through their documents and I have to look through their finance agreement. And when I look at the finance agreement, boy, oh boy, does my heart drop for these owner-operators and how much they're getting scammed. So an owner-operator with really good credit, and on top of all that, he's also a homeowner, and I saw that he's paying 16.5% interest rate charges. Now, I don't understand why in the world would somebody agree to 16.5% financing rates when you are a homeowner and you have good credit. But I'm going to teach you everything I know. I'm going to try to save you from getting into that horrible deal, and hopefully you'll learn something from this video on how to get the best rates out there. So let's talk about the difference. Let's take a brand new unit today, whether it's a Volvo, a Kenworth, whether it's a Freightliner. We're not talking about the EV trucks, those are way out of the budget, but we're talking about Freightliners, Volvos, Kenworths, Western Stars, whatever truck you want to go with. Those trucks are usually today in today's market about $220,000. Now, if you don't have at least $40,000, I don't recommend you becoming an owner-operator. So in the scenario of all four trucks, we're going to put $40,000 as a down payment for those trucks, and we're going to go out shopping for $180,000 in financing. So I have created 4 different scenarios so I can go over with you on different interest rates. So one of them is at 7.5% financing interest rate. The other one is 9.5%. Then we have another one 11.5%. And lastly, we have 13.5%. We have our trucks over here, and now we're financing that truck. We're getting financing for $180,000. So in scenario number 1, we're financing that truck at 7.5%. And you can see here over the course of 60 months, which is equivalent to 5 years. Now, your payment is $3,600 if you were to get 7.5%. But if you were in scenario number 2, where your interest rate is 9.5%, your monthly payment jumps up to $3,780. Now, you might not think that's a lot, but look at the total interest paid between 7.5% and 9.5%. So over here, you're paying $36,409. And in scenario number 2, you're paying $46,000. $46,800 to be exact. Now, again, you might not think that an extra $100 payment is not a lot, but if you look at it over the course of the 60 months, we're talking about $12,000. Now, in scenario number 3, the driver got 11.5%, so he's paying $57,000 in interest, but his payment is only $3,958. And scenario number 4, with 13.5%, the driver is paying $4,141, and over the course of 60 months, he's paying $68,000. Now, I want to put these side by side just so you can understand how much of a difference does 2% make, okay? And especially 4%. So most people out there, they really won't pay attention between 7.5% and 9.5%, between 7.5% and 11.5%, and especially between 7.5% and 13.5% makes a world of a difference over the course of 60 months. Take a look at 13.5% and take a look at 7.5%. So at 7.5%, the driver paid $36,400 over the course of the 60 months in interest only. And in scenario number 2, at 13.5%, he paid $68,508 in interest only. Now that is about a $32,000 difference between scenario number 1 and scenario number 2. That's a lot of money over the course of 60 months. So that's for the brand new unit. These are your 4 scenarios. If you have really good credit and you are a homeowner, guys, do not accept anything over the 9.5%. If you don't get it, find yourself another broker. So guys, this is the moment that I'm going to expose all those dealerships dealerships and what they do. When you're buying a $220,000 truck at a dealership and they come up to you and they say, hey, my friend over there does the financing and he'll be able to put a deal for you together, most of the times the drivers end up going with those recommended finance companies of the dealerships. But what they do is they tackle on another 1 or 2% and give it a kickback to the dealership. So what do I mean by that? So let's say the finance company only needs 7.5%, and for the deal, the finance company is going to kick back 2% to the dealership for giving them that deal. So what happens in a scenario number one? So let's take scenario where the 7.5% versus the 9.5%. You'll see that there's a difference of about $12,000 in interest. So that would be the kickback to the dealership for giving the finance company that deal. Okay, again, that's $12,500 that dealership just received for giving that finance company that deal, that recommended finance company that they always use. So be careful with that and don't fall for this bullshit. Make sure you have your own broker that's working on your side. And if you don't have one, make sure you're clicking the link below, put down your information and let these brokers get in touch with you and let them compete for your business. Okay, do not go with the recommended dealership. And if you are gonna go with them, just check out other people's rates. Don't fall for this because it's a lot of money you're putting on the table. Now, in scenario number two, let's take a used truck. Okay, the exact same scenario we took as scenario number one. Let's take a used truck. Now, most used trucks that are about 3 or 4 years old, they're gonna cost you about $120,000. In this scenario, we're gonna say that the driver has $20,000 as a down payment, and we're gonna finance that truck over the course of 48 months, okay? What I did here is I took 4 different scenarios, again, just like with our brand new unit, where we have the interest rate at 7.5, 9.5, 11.5, and 13.5%. So I've done the exact same thing. Now, before we expose these finance companies and how they make a lot of money off of you, I just want you to see the difference in payments. Okay, so here we have at 7.5% over the course of 48 months. Now, guys, I don't want you financing 4-year-old or 5-year-old trucks over the course of 5 years or 6 years. Why? Because the finance company, the horrible finance company, will most likely, or that horrible broker will most likely push you towards a longer deal. Why? Because their commission is a lot more on longer deals versus shorter deals. But you need to do what's right for you and what makes sense for you. And the shorter the deal is, the better it is for you, because most likely in year number 3, year number 4, and especially year number 5, you're gonna run into a lot of problems with the repairs and maintenance, right? You need to take that into account, that you can't continue to pay a $2,500 payment when your truck is about 7, 8, or 9 years old. You're gonna run into a lot of problems with that truck. And will you be able to keep up with these payments? And if you have it over the course of 60 years, that's just a recipe for disaster. So remember, if you're financing a 3 or 4-year-old truck, make sure you're doing it over the course of 4 years, not 5 or 6 years. But let's quickly take a look at these payments. So with 7.5%, your monthly payment is $2,400. With 9.5%, it's going to be $2,500 approximately. With 11.5%, it's $2,600. And with 13.5%, it's $2,700. Now, guys, another trick I'm going to teach you right now. Whatever you do, the first thing that these finance companies, these guys are like wolves, they're sharks. They know how to make money. The first thing they're going to ask you, well, what do you feel comfortable with? What kind of payment do you feel comfortable with? And you are not going to say anything. First, look at the numbers. Why? Because I can make this beautiful thing right here. If you're going to tell me, oh, I feel comfortable with $2,500, well, guess what I just did? I took a beautiful monthly loan calculator. I will give you your $2,500 payment, but I'll do it over the course of 56 months. And I'll charge you 15.5% interest rates. Why? Because you told me that you're comfortable with $2,500. I'll make that happen, but I'll make all the money in the world on that deal because you told me you're comfortable with $2,500 payments. Whatever you do, don't tell the person $2,500 payments or whatever payment you have in your head. You're gonna play poker and you're not gonna be telling them what you have. It's like going out there playing poker and telling them what cards you have in your hand. You don't say this information to them, okay? Let them come to you, give you the interest rate, give you the monthly payments, do your own research and compare prices with other brokers out there, okay? Now, here's the cherry on top, okay? This is where they all make their money. So every finance company or a broker, they have their commission. So what does a broker do? The broker actually takes your file and submits it to 6 or 7 different banks. They will come back at them with different interest rates. Now, most likely after the years, I've established a relationship with about 2 or 3 extremely competitive banks out there. I know the underwriters, I know who's writing up these deals, and I constantly bring them files, because if I bring them files, we're buddies, we're friends, and this is the way the world works. So when your file goes to them, the banks will give the broker 5%. Now the broker is going to tackle on another 2% or 3% on top of that deal. Now, most brokers will work under 1% or 1.25%. And those are the guys that I'm using here at the link below, where I encourage you that if you're looking for financing, make sure you use these people that I've filtered and I've interviewed myself. Why? Because I hate what's happening in our industry. But what these crooked finance companies do is they'll get a really good file, just like my friend over there that I talked about, the owner operator, who inspired me to do this video, because it just breaks my heart that somebody with good credit with a house is paying such ridiculous interest rates. Okay, what they do is they get 5% from the bank, 6% from the bank. They'll get 7% from the bank, and they will tackle another 7% on that deal. And this is what drives me nuts. Why? Because for a deal like this, you're telling me that a broker who submitted your file over the course of 48 months made $16,000 on the deal. Why? Because he submitted your $100,000 truck purchase to the bank, and that's what drives me crazy, and that's what I hate about our industry. So these crooked brokers, yes, there are a lot of them out there, and that's why you have to compare between one broker to another broker, okay? You have to compare prices. You need to go to that dealership, whatever their recommended finance company is, and you need to use somebody completely different and separate. And when they tell you their approximate interest rates, tell them you want to see an amortization schedule, because that they will not be able to lie to you. So I hope you learned something from this video. Hopefully we exposed all these dealerships. Well, we didn't really tell people the names of the dealerships that do this, but I'll hold off on that information. But hopefully you learned something from this video. Guys, do your homework, do your research, make sure you're comparing prices, and make sure you're a part of this channel, because you'll get a lot of tips like this over the course of the next year or a couple of years while you're following my page. Make sure you follow this page. I'm Ronen, R-O-N-E-N, and I'll catch you in my next video.